Hey, this is Keith Weinhold from the Get Rich Education Podcast. You are listening to my friend John Larson in the Real Estate Cowboys. Don't quit your daydream.
Have you thought about becoming financially free through real estate investing, but don't have the time or knowledge to get started? Welcome to the Real Estate Cowboys podcast. Each week, we discuss passive income investment opportunities in the red-hot Texas market. John Larson and the Real Estate Cowboys will show you how to leverage their team to build wealth in real estate through passive investment opportunities. And now, here's John.
Hello, this is your host, John Larson. Welcome back to another edition of the Real Estate Cowboys podcast. This week, we are going to be talking about private lending or becoming a hard money lender. Really, in today's market, I don't see any other solid investment options that are going to get you truly passive income in real estate and a high double-digit return. We're at a point in today's market where the values of single-family homes, even multifamily properties, have ran so high, and now interest rates are starting to creep up to where the cap rates on cash flow are really starting to be compressed. But I really have a lot of investors who are still coming to me looking for good cash flow options. And when I present them the opportunity to be a hard money lender, a lot of people are jumping at it. Now, with private money lending, of course, you cannot leverage your money, which that's one of the main benefits, in my opinion, of investing in real estate. But it's a great way to put 50, 100K to work for you and see really solid returns in a very, very passive manner. You're not dealing with the day-to-day or month-to-month or yearly maintenance, the capital expenditures with owning rental properties. You're not dealing with vacancies and troublesome tenants, which can turn your experience into anything but passive, especially if you're chasing some of these lower class C and D properties that look great on paper, but in real life just don't really pan out due to the fact that they're just not in the best neighborhoods right now. I see a lot of investors are gravitating towards these cash flow markets like Alabama and Detroit and a lot of other major cities in the U.S. because those are the only areas right now that are providing good cash flow on paper, but not so much in real life. There's just a lot more trouble that comes with these lower class properties, which we talked about on last week's episode. And I talk about quite a bit, avoiding C properties, avoiding for sure D properties, just because they're a lot more troublesome. Our investors, and I'm sure many other investors out there, are looking for a very passive model. And I feel like if you get into that passive model with owning rental properties, you need to kind of hang in that high B class to A class area. Just those are the markets and those are the properties where you really do get a passive experience just because they attract a lot better tenants that make better income. They're on a salary position and, their car breaking down is not going to have any effect on them paying rent for that month. So I love the private lending model. I love, giving my investors that really passive experience and a great way to generate consistent, stable cash flow each month. The beautiful thing about being a private lender, you're going to be the bank. So you know what interest payment you're going to get every month. It doesn't change. So a lot of investors are going towards that route, especially in today's market, but also the IRA 401k crowd, the opportunity that you have when you self-direct your funds. There's huge benefits of private lending through an IRA or 401k. One, like I said, it's passive. Two, it's a fixed rate return that goes back into the account every month. And then with retirement accounts, the money's going back into the account tax-free or tax-deferred. So it's a very, very popular option today. It's a very popular option in thriving markets like DFW, which we talk about a lot here on the Real Estate Cowboys, because there's so many people moving into the market. You have, on average, this has been for the past decade, 150,000 people a year moving into the DFW area, because there's so many jobs and so many opportunities here. And businesses are also following suit. So the demand for new single family homes, new office space, new retail space is at an all-time high here. And if you're going to lend money to anybody or lend money on a specific project, wouldn't you want to lend money in a market that has proven to be very close to recession proof as possible in the DFW area. You look at the last recession, which was devastating. Dallas-Fort Worth wasn't really affected because of the fact that the economy was so diverse and things were just chugging along. Affordable real estate here, a lot of things play into DFW being a great market to invest in and a great market to lend money in. Okay. So I want to start off with, how do you even become a private money lender or a hard money lender? Well, number one, you have to find some money that you're willing to lend. Is it cash savings or is it an IRA or 401k? If it's an IRA or 401k, you need to self-direct that money. You need to get it out of the traditional investments that they're in right now, stocks, bonds, mutual funds, and you need to get it into a self-directed account with a self-directed custodian. Couple that come to mind, Provident Trust, Equity Trust are a lot of companies that we work with where they manage self-directed funds for clients. And so that would be number one. You got to get the funds self-directed. If they're tied up in traditional investments and tied up in a traditional account, you're not going to be able to use those funds for private lending. But I see more and more investors learning about self-directing their accounts, taking control of their retirement funds, putting that money into real estate, putting that money into being a hard money lender. And from just talking to investors around the country, many investors love the private lending model for the reasons that I just named. It's passive and it's a fixed rate of return. They know what they're going to get every month, and it's a great way to grow their retirement account. Whereas on the flip side, if you invest in single family homes through your retirement account, the debt options that are available to you just aren't the best. It's a non-recourse finance loan, meaning that the only recourse that you're putting up and collateral that you're putting up is just the property itself. And so, these banks aren't really looking at a credit score and things of that nature, which also results in the fact that you're not going to get the most favorable terms. You're going to be putting more money down on these properties, and your interest payment is going to be higher by going for a non-recourse or alternative finance loan. And then if you run into some trouble with some vacancies, now your retirement account is paying the interest and the principal and interest payment. You're paying all the expenses associated with the property. And so in my opinion, with retirement accounts, I love the private lending model. It's a great way to grow that IRA or 401k without having to deal with some of the risks that are involved with owning single family homes. Now, one of the risks of being a private lender, obviously the borrower could default. But we're going to talk about some ways and some private lending models to where you are protected, to where that money's collateralized. So, like I said, cash savings, if you have some cash lying around, that cash savings that you're going to use, depending on what type of tax bracket you're in, that is going to be taxed at the end of the year by the IRS. And depending on what type of tax bracket you're in, you could be taxed pretty heavily, maybe up to 40% on interest payments received. But even still, these private lending opportunities that are out there are paying double-digit interest payments to you. So if you're paying some of that back to taxes, it's still a pretty solid cash flow generator for you in a very passive manner, like I just alluded to. But that'd be number one, finding money that you're willing to lend. And then number two, which is the most important part, you want to find a good borrower to work with. So we are a borrower when it comes to our private lending opportunities. We, as the borrower, we go and as the borrower, we're also the developer. But we go and find really good, safe development opportunities in the Dallas-Fort Worth market. So we're usually going after some raw land, where we're then going to develop the land to either build single family homes, or build office spaces or build retail space. And so usually it starts with getting money to buy the actual land itself and do the development, put it in the roads, put in the infrastructure to where you can start building on it. And then from there, we'll also raise funds to actually purchase the lots from the development and then start building buildings on the development as well. So either single family homes, as I said, or office space is primarily what we're focused on right now, because in DFW, there's just so much demand for that. But we also have models where we just raise money to develop land and then get lots, single family lots, ready to sell, get them turnkey and sell them to some of the largest national builders in the U.S., like Lennar is one of our clients. So I think there's really, really good opportunities in a market like DFW just because of how safe it is, in my opinion. And I don't see anything really changing in the near future. I don't see, people not wanting to move to Dallas anytime in the near future. I don't see jobs not wanting to move to the city of Dallas anytime in the near future. There's no state tax in Texas, and it's just a very, very business-friendly climate here in Texas, in Dallas-Fort Worth. And Dallas-Fort Worth is already home to the most corporate headquarters in America. And they have over 20 Fortune 500 companies here and over 40 Fortune 1000 companies here. So the economy is really good, and it's very diverse. And that's driving people into the market. And if you're going to be loaning on a development, I think that it's very important to loan in markets where you know there's going to be consistent demand for these type of projects moving forward, because that will ensure that the borrower will be able to pay you back that initial principal investment that you make with them, right? It's great to receive those interest payments every month, but you also want to make sure that that $100,000 that you lent out is going to get paid back to you. And so by finding a good borrower to work with, the borrower must have a good track record as a developer or a house flipper. Private lending or hard money lending is actually pretty popular among house flippers too. They're looking for capital. They're not going to be able to get any sort of Fannie Mae financing for buying distressed properties because the properties must be in livable condition to qualify for Fannie Mae finance. So they're looking for that alternative loan so they can buy these properties. Then they're going to need money to renovate them. They renovate them. And then when the property is completely rehabbed, they put it on the retail market and they sell that property off. That's how the lender is paid back. So I prefer to do a little bit longer projects, bigger projects. I like to do projects that are at a minimum an 18-month term so my investors can just keep their money working for them for 18 months. It just makes it more passive. We also do projects that are up to 36 months. So that's 3 years where your money's put to work for you, earning double-digit returns. So investors like that. With the house flipping model, it's still good, but it seems like every 90 or 120 days, you're looking for another deal. And you might be able to build a relationship with your borrower to where, you trust this person. They've performed numerous times for you on the loans. But also with single family homes, I've seen it. I've seen it when it's really good. I've seen when it's really bad. I've seen when it slows down. There's certain times throughout the year when the market slows down. Like now we're getting back into children going back to school. Not as many people are out in the market looking for single family homes to move into. So I've learned with single family homes and the active model of flipping them, there's a lot of things that could go wrong. The rehab can go over. It seems like the rehab budget goes over almost every time. And also the hold time, the exit strategy can sometimes take longer than we initially expected. So in my opinion, with single family homes, lending on single family homes, the margin for error is a little bit, it's bigger. The margin for error is bigger. Whereas a larger development, in my opinion, it's not as, although it seems like there's more moving parts, the margin for error, I think, is slimmer, especially if you're working with a borrower and a developer that has a good proven track record. Obviously, the company that you're working with must be ethical. I'd make sure that you're looking these people up on the Better Business Bureau, doing some due diligence, doing some research on the borrower to make sure that you're loaning money to somebody who is reputable and ethical. And then these borrowers should be able to show you proof of successful past projects. They should have some case studies, some photos and videos of past projects from where they took, raw land and eventually turned it to an office park. They should have some photo and video documentation and a case study showing that. And the more that they're able to provide, the better you should feel with them as a lender lending to this borrower. So I would ask for some proof of that stuff as well. And if they're able to provide that proof, then I think that you're dealing with somebody who's pretty ethical and somebody who obviously has a proven track record. You're also going to want to see that this borrower is able to provide all the financial information on the project and timelines on completion and a detailed executive summary and, at least one solid exit strategy, if not multiple. With the developments that we do, we always look for multiple exit strategies. Either we're going to sell it on the retail market, sell it to an investor, or we're just going to refinance it when it's completed and hold it ourselves as a cash flowing property and just keep it in our portfolio. And we can do that with single family homes. We can do that with retail space, and we can do that with office space. Also, you want to make sure your money is collateralized by the land in the project. So with our private lending opportunities, our hard money lending opportunities, our investors are given a deed of trust, which is the project and the land. It's closed by a local title company here in Texas, and each lender is provided a deed of trust, which would be called a multi-level deed of trust because there's more than one lender on a particular piece of land and project. So you're going to want to make sure you have that, because that's the way that your loan is collateralized. In case the borrower ever defaults, you have recourse. You can go through with the foreclosure process, take full ownership of this land and project, see it through on the completion, or just sell it off and recoup some, if not all, of your initial funds that you invested into the deal. So this is a great way to protect you. You also want to make sure, as an extra safety blanket, that there's a commercial lender or mortgage broker in the middle that's between you as the lender and the borrower, that's formalizing the agreement and legitimizing the transaction, making sure, there's documentation in place to where this borrower agreed to pay back this lender this amount, and so on and so forth. It's just an extra layer of protection for you as the lender. So keep that in mind. From here, I just want to talk about the process a little bit, what the process entails of being a private lender. Number one, the lender, you're always going to want to review the project that you're lending on. So ask for those details that I talked about, an executive summary, the financials, all the stuff that goes into doing the due diligence needed to make sure this is a safe project to lend on. And if you're comfortable with the project, then the lender, you're going to send your principal payment, your loan amount, to an escrow account. Typically, if you're working with a solid borrower who's ethical, they should just have an escrow account set up. That money should not be going directly to them. The escrow account is set up so you can get the money into the account, so you can reach the proper amount that you need to close. But when investors come in, you're not going to be seeing an immediate return right away. It's the same thing as closing on a single family residence. You're not going to see returns right away after you get a property under contract and money in escrow. You don't see the returns until after the property closes and the tenant is placed, and so on and so forth. It's kind of the same thing with private lending. It's going to be like a 60 to 90 day process in most cases to raise the proper amount of money needed to actually close on the project. And so when you get your money into escrow, it won't be working for you right away. But as soon as the property closes, you're going to start receiving monthly interest payments, just like a bank would. All right. And so, yes, if you're working with an ethical group and they're telling you where to send the money, in most cases, I'm going to want to see that sent to an escrow account with a title company or something like that, some sort of third party. So in case I want to pull out, or in case it's taking longer than it should to raise the money, you have the opportunity to get your money back. The third thing, the funds are going to sit in escrow until enough money is raised to close the project. And typically the purchase of the land or lot, funds to construct or refurbish a building, and then any additional costs, points, and fees is going to be is what's going to encompass the entire raise. Okay, and so yes, your funds will sit in that account until enough funds are raised to then close on the project. So some of the guys that get in early, you might wait a little bit longer, but then some of the guys that get in towards the tail end of a raise, you might talk to the borrower and they're saying, yeah, I only need, another $500K and then we can close, and we should be able to get that in a week or two. And then from there, we're going to be able to close on this deal. And then, your money's only sitting, not working for you for 2 weeks, right? So the guys that come in on the tail end are usually the ones that are in the best position because the money's not sitting stale for a while the lender is raising the funds, right, for the borrower. Once enough money has been raised to close on the project, and like I said, typically it's 60 to 90 days, the title company that set up the escrow account is probably also performing the closing. That title company will facilitate the closing, and each lender will be provided a deed of trust in the form of, like I said, a multi-level deed of trust, which shows multiple lenders on one project. The lender will also receive a promissory note from the commercial lender or mortgage broker between the lender and borrower. So you have a promissory note to pay from an actual third party who's licensed to secure loans between the borrower and the lender. That's one layer of protection. And then also you have a deed of trust, which is collateralizing your loan. In the case of a default by the borrower, the commercial lender or mortgage broker will facilitate the foreclosure process. That's another good reason to have that commercial lender or mortgage broker in the middle. That's formalizing the agreement between the borrower and the lender. They can assist if there's any default by the borrower to proceed with the foreclosure process. The lender will also receive their first interest payment at that time at the closing, and most borrowers are willing to pay 8% on the low end, up to 15% I've seen in some cases on riskier projects. We're going to talk about that a little bit later, but you can see anywhere from 8 to 15% typically you're going to see like 10 to 12% on private lending, hard money lending opportunities. And so that's a pretty solid rate of return, right? Especially in today's market. People that are trying to invest in real estate deals, to see double-digit returns is tough, especially on good, safe opportunities. And then also, those payments could fluctuate depending on some risk that's involved. But with the private lending model, it's a fixed rate. So you know what you're going to be getting at each month, which is very, very attractive to a lot of my investors. And so an example would be, a past project that we did a 10.5% interest rate. That was what we were willing to pay for the money. So let's say an investor of ours came in at $100,000. That 10.5% interest rate would be a monthly dividend of $875 per month that you're going to get consistently each month. And like I said, that's what makes this model so popular to our investors and other investors out there, is just the fact that you know what you're going to get each month. No surprises. And that particular deal, the term was 18 months. So that means you'd be collecting $875 for 18 months, which translates into, I think, about $16,000 over the life of the loan. So pretty solid. 100K is making you 16K in 18 months. So really, really solid investment option. And that's why this is so popular among the IRA 401k crowd as well, because that, like I said, those payments are going back into that retirement account, tax-free or tax-deferred. All right. And so very, very, very popular option among our IRA 401k crowd. And so continuing on with the process, the lender is going to continue to collect monthly payments until the loan matures. And so, like I said, on that last project that we did, the loan went for 18 months. The loan would mature 18 months from the closing. At that time, we usually go back to our investors, and if you're working with the right borrower and building a relationship with this borrower, and this borrower has a proven track record of being a solid developer, they should have some other opportunities following this one up, the initial one that you invested in. So at that point, you'd have the opportunity to, instead of taking your $100,000 principal investment back, to just move that to another deal and keep the money working for you at, let's say, 10.5%. Okay. So that's a great way to just keep the money working. An initial 100K investment can really turn itself into a great profit center for you in the form of interest payments if you're working with the right borrower and they have more and more developments that back up the initial one that you invested with. It's a great way to just build a relationship. It's almost like buying into a program. Just keep that 100K working, right? And then maybe once you make some money, maybe you decide to come in a little bit more on the next project and have more money working for you at that 10.5% rate. So that is what I think attracts a lot of our investors. The fact that it's very passive, the fact that you know what you're getting every month in the form of a dividend, monthly dividend. And then you're also buying into a program if you're working with the right group. You can just continue to roll that money, we just call it rolling, into future investments or future developments along the way, and just keep the money working. And so that's pretty much the process. It's as simple as that. It's just a way to kind of keep a relationship moving. And like I said, if it's done with the right team, the private lending or hard money lending model can be extremely mutually beneficial for both parties and can result in a long-standing profitable relationship. And so that's pretty much a high-level view of how the whole private lending process works. When we get back, I want to talk about some benefits of private money lending. I want to delve into that a little bit further. And so we're going to take a quick commercial break. When we come back, we'll talk more about the benefits of becoming a private money lender or hard money lender. Stay tuned.
Looking to complete a 1031 tax-deferred exchange and are needing financing for your replacement properties? Let Graham Parham at Highlands Residential Mortgage guide you through the process and make your 1031 exchange go smoothly and on time. As a seasoned investor, Graham owns several investment properties himself, and he can share with you the best way to plan your exchange. Graduate into a better property or properties and make use of leverage to obtain better cash flow and higher returns on investment. Highlands Residential Mortgage has one of the best in-house loan processes to deliver your loan on time and without any surprises. We are 1031 exchange friendly. Call Graham's toll-free direct number today at 855-326-6802 for your free mortgage consultation, or visit us online at texasinvestorloans.com. Highlands is an equal opportunity lender, NMLS 195724, located 1201 North Central Expressway, Dallas, Texas, 75234. Highlands Residential Mortgage, NMLS 134871, is not a financial advisor.
Welcome back to the Real Estate Cowboys. We are talking about private money lending opportunities and becoming a hard money lender as a good investment option in today's real estate market. So we kind of talked about the process of becoming a private money lender, but now I want to get into the benefits of becoming a private money lender. And number one, it's the fact that it's so passive. It's probably the most passive form of real estate investment available. Many people want to relate rental properties to passive income, but really, truly, rental properties are really not that passive. There are problems that can arise with rental properties. You have people living in the homes. You're responsible for taking care of the maintenance, or at least paying for the maintenance to be taken care of by a property management company. You're going to run into some vacancies. You're going to run into some things like that to where you're going to see a negative balance on your profit and loss sheet. Now, with private money lending, you lend some money to a borrower, a proven borrower, who is a proven developer, and you're just going to get a fixed rate of return on your money in the form of monthly dividends or interest payments. And so, real estate investment with private money lending really does represent the most passive real estate investment option available, in my opinion. And there's no more natural way to become a real estate investor. You don't have to find a property. You don't have to do any labor to the property. You don't have to look for tenants or collect rent or perform maintenance or pay for maintenance. You don't have to pull permits or put it up for sale. After you've completed your due diligence and quoted your loan terms, all you do is supply all or part of the funding and collect your monthly payouts. So that's why, in my opinion, private lending is really the most passive option out there for investors to get involved in real estate investing. You're loaning on a hard asset, and in return, you're getting a fixed rate of return on your money. It's also able to provide some higher cash flows. You're talking about, in most cases, double-digit returns in the form of interest payments. So when you compare it to other real estate investments, if not all, private money lending provides one of the highest cash flow figures. Based on one of our past projects, as I discussed, your private money lending investment could earn upwards of 10.5% annually. So a 10.5% annual return on your money, that's really hard to find in today's market when you're looking for cash flowing properties, unless you're buying in, for lack of a better word, ghetto areas. And so our company, you receive monthly interest payouts on your initial principal investment. And it's typically over a 24-month period. And as I said, those payouts begin as soon as the project is funded. So if that isn't enough to pique your interest, consider you also have the option to roll the money into other projects with similar interest rates. Like I said, just keep the money working for you. And in our experience, I would say almost 99% of the time, investors roll their money into another project once they see how much that they can earn and that the experience is extremely passive. It's also a very safe way to invest. As a private money lender, you're pretty much at the safest seat at the table. You're the bank. You're acting as the bank. And why do banks make so much money? Because, they have the lowest risk in any deal. And so as the bank, you have the lowest risk, obviously, and your investment goes directly into an equity account until the project is fully funded, which is typically the 60 days, as I talked about. At that stage, once we close, you start earning the monthly payments at a predetermined rate. You don't have to sit and worry about if the stock market is going to fall. You know precisely, almost to the penny, how much you're going to be getting each month. And after the project sells, you receive the balance back of your initial investment. And then finally, real estate private money lending is secured with a property, a hard asset. When you opt in to invest in a private lending opportunity with real estate, you have the peace of mind knowing that your investment is secured with real property. There's an actual asset that backs up your money and collateralizes your loan. As such, there's very little chance that the real estate developer could default on an investment, making your investment very secure and extremely low risk. And like I said, if you're investing in the right markets, like Dallas, it's a very, very low chance that you're going to be dealing with a borrower who's going to default. They have to absolutely not know what they're doing in this market, because there is truly so much demand for new buildings, for land to be developed. Builders are chomping at the bit out here in Dallas to get turnkey lots ready to build on. They're beating down our door. And there's so much need for office space in these growing areas around DFW because there's so many people moving here due to all the jobs that are moving in here. And these people need offices to house out of. So in my opinion, it makes total sense to become a private lender in a market like DFW. I think it's a really, really safe opportunity. And so one of the things I wanted to touch on too was I want to just kind of compare the benefits that we just named to the benefits of single family rentals, because we're also big advocates of building rental portfolios. But I think that's more so for the investor who they have some cash savings lying around, not necessarily for the IRA 401k investor, and they want to take advantage of the tax benefits, right? Because with investing in single family homes, you get a lot of tax write-offs, and depreciation being one of the largest ones. You're not going to get that with private money lending. And as I said earlier in the show, if you're in a high tax bracket and you're lending money out, the IRS is going to tax you pretty heavily on interest payments, but still, it's a consistent amount of money coming in each month that you know is coming in. You also don't have the power to leverage, right? Example, you could buy a $100,000 single family home with $20,000. With private lending, you have to invest $100,000. There's no way that you can leverage that $100,000 on private lending. You are the bank here. And so there's no leverage options, right? But very high cash flows, as we talked about. So you're seeing a very high rate return on that money that you're investing. And then there's really no pride in ownership, right? You don't own anything. Yes, you have a deed of trust that secures your money. Technically, you could foreclose on the land if the borrower defaults and become the owner. But, there's no actual pride in ownership of that's my single family home, and show your family pictures or drive by it. And that that's actually your physical asset. So that's one of the things that lacks with private money lending as well. But the fact that it's something that is an amount that is going into your account each month, and also with retirement accounts with the money going back in tax-free or tax-deferred, it's such a strong option. I just really don't know any other better option out there, especially for my IRA 401k investors. And so this show, if it piqued your interest, if you're interested in becoming a private lender, feel free to go to realestatecowboysdfw.com, put your information. A member of our team will reach out with more information on private lending with our company, and also provide details on projects that we're currently lending for. We do have open projects that you can get into now that will be closing probably by the end of October, and you can start receiving interest payments as early as November. Fixed rate returns on your money. And I think both projects that we're doing right now, one is an 18-month term, one's a 24-month term. I believe both are the same interest rate, but if you wanted to keep the money working a little bit longer, that option is available to you. So just go to realestatecowboysdfw.com. Even if you just want some more information on private lending opportunities or single family rental opportunities or vacation rental opportunities, all of that is available to you on the website. You can also go to our other website, my company's website, American Real Estate Investments website, and that is www.areiusa.com. Put your information in there, and there's plenty of info on our sites and plenty of education on our sites, and a member of our team can reach out to you with details on how to get started, because this private money lending option is really a program. You're investing into a program. We have ways that we can keep your money working for you for the rest of your life. And so, and like I said, in a very passive manner. So if you're interested in that, visit one of our two websites, areiusa.com or realestatecowboysdfw.com, or both. And also my book is now out, The Passive Income Guide, What's Your Return on Life? This also has information on private lending, single family rentals, a whole 89 question property management questionnaire that will help you properly vet out good property management companies, information on vacation rentals, 7 things to consider when investing. A lot of the content that we talk about on the show is in this very easy to read book. It's about 50 pages, and it's a great read for someone who's getting started in trying to earn passive income through real estate. So check that book out as well. You can get that on Amazon, or you can get that from either one of our websites, areiusa.com or realestatecowboysdfw.com. Well, that's all I have for this week. This is John Larson signing off. And remember, everyone, what is your return on life? Have a good week.
All opinions expressed by the hosts of the show are the opinions of American Real Estate Investments, LLC, and do not reflect the opinions of guests or sponsors. No personal or professional advice heard on this program should be considered an endorsement to follow a real estate financing or investment strategy. Before acting on any information, seek advice from your financial, tax, mortgage, or real estate advisor, as the information is not guaranteed and investment strategies have the potential for profit or loss.